Welcome to another S&P 500 analysis. Today is November 5th, 2023. October finished with a loss, and that gave us a 3-month losing streak. November started with a bang, and based on the 4 times a 3-month losing streak that have occurred in the last 20 years, the following month have been positive. So what do you think? Will November be positive? Put your answer in the comment section below. We'll look at what the market might be telling us and see if your expectation agree with the analysis. Stay tuned. On this monthly chart of the S&P 500, I have highlighted those periods where we saw 3 consecutive losing month streak here. The first one here is back in 2008. So then followed by 1 positive month after a 3-month losing streak. Then on 2016, the first one, we saw this 3-month losing streak followed by 5 consecutive up months. Then we have another 3-month losing streak and followed by a 4-month winning streak. Then in 2020, we have a 3-month losing streak and followed by another 5-month winning streak. So will this 3-month losing streak be like the one in 2016? In 2020, will follow by multiple months or positive, or will it follow the 2008 where we only see 1 positive month after a 3-month losing streak? Now, there is the possibility of November turn to be a negative month, and if that's the case, then most likely we could see December to be negative as well. And the reason why I'm saying that is you look at the last 20 years, we have not seen a 4-month losing streak, but we did see 2 5-month losing streaks. So if that is the case, that we will see a 5-month losing streak, if November is turned out to be negative, that implies December will also be negative. So we'll have to wait and see how November ended up. If it ended up positive, then there's a good chance that we could see December to be positive. But if it ended up negative, then there's a good probability that December will be negative. And on this weekly chart, you notice that after 2 consecutive weeks, we saw a up week last week, and that should not be a surprise to us because on this 10-year chart here, I have marked off all the instances that have 2 or more consecutive down week. The 2 consecutive down week, I marked it with a eclipse, and the one with more than 2 consecutive down week, I marked it off with a rectangle. So you can see that if you stop the video and count them, there should be a total of 51 instances where there's 2 or more consecutive down week. And out of that 51, 32 of them is 2 consecutive down week, then followed by a positive week. So that equates to a 63% probability that we would see a 2 consecutive down week out of all these with a positive week to follow. And that is what we saw last week. So it shouldn't be a surprise to us based on the probability that it would have favored that sort of outcome. Now, before we go and take a look at the price action of the S&P 500 in more detail, let's take a look at the sentiment chart here. Notice that the VIX have turned back from the above 20 level down to near the 15 on Friday. So definitely the market participant or once again being a little bit more complacent now. They are no longer as fearful as the week before. And also the put-call ratio was above 1, and it now came back down on Friday, dipped just slightly below that 0.75 level. So the market participants are also getting a little bit more risk on than in the past month or so, couple months or so. So definitely the tone have changed and the sentiment have shifted to a little bit of a complacence and also a little bit more of risk on from the market participant. And looking at the internals here for the New York Stock Exchange, notice the up-down volume ratio was over 8-1 in favor of the up volume on Thursday rally, and the advanced decline was over 2,300 more advancing issue than declining issue. And likewise, on Friday, there was almost 5-1 in favor of up volume and over 2,000 more advancing issue than declining issue. So that represented broad market participation and pushing the indexes up, and also with a lot of buying pressure. And for the New York Stock Exchange, new 52-week high versus 52-week low. On Thursday and Friday of last week, we actually saw more new 52-week high than 52-week low. So that's been a while since we saw that, although it's only a little bit of a small number, but nevertheless, it's a change in tones. And for the New York Stock Exchange cumulative AD line for last week, we did not see any divergence. And on the NASDAQ market, we also noticed that the up-down volume ratio was almost 4.5 to 1 in favor of the up volume on Thursday and Friday. And also the daily advanced decline was over 2,000 more advancing issue than declining issue. On Thursday, there were 2,235, and on Friday, we actually saw 2,403 more advancing stock than declining stock. So definitely the NASDAQ market is also seeing some buying pressure as well as market participation. Now on the 52-week high versus 52-week low for the NASDAQ market, we did not see a positive on that. The 52-week low still outnumbered the 52-week high, although it's getting a little bit more, the margin is getting much smaller now, but we are still not seeing any positive 52-week high versus 52-week low. And for the cumulative AD line in the NASDAQ market, we did not see any divergence from last week, but we are still waiting for this negative divergence to get resolved, this long-term negative divergence. And looking at this 10 versus 2 yield curve here, we're still seeing an inversion of minus 0.267. So it is still a little bit away from the uninverted. And for the 10-year versus a 3-month yield curve, we actually saw it came down a bit, and it is inverted, sitting at minus 0.85. And looking at the 10-year yield, we saw the 10-year yield came down last week after the FOMC latest announcement and also Jay Powell's press conference. We see it came down to 4.57 as of Friday here, and it got close to 5 the week earlier. And for the US dollar, we also saw the US dollar pull back and dip below this 105.88. Right now, sitting at 105. Be watching out for this 103.80 to see would it come all the way down to this level. Because I'm expecting it to come back up above this 105.88 and eventually come back up and test this 108. Now, there are a lot of people thinking that this could be the peak or the top for this cycle for the dollar. I think it's too early to call that. And looking at crude oil, we saw crude oil been bouncing around last week between this 80.5 to 83.5. So right now, we're basically watching to see would it be able to get back above the 82. If it break this 80.5, then I'd be looking for oil to possibly pull back to this 77, 78 level here to see would it be able to find support here. Now, if it get it back above this 82, then I'd be looking for oil to come back up to this 84, 80, 85 area. And I still believe oil will have much higher price to come. And I'm still looking for oil to eventually come back up and take out this $94 level. Looking at the weekly chart of silver, you see silver is still kind of bouncing around in this lower region of this balance area that I'm watching. So if it could stay above this 2240 area, then I'd be watching for see would it be able to come up and take out this 2420 and then possibly push up to this 2627 level. Now, if it move back down and dip below this 22 area, then I will be watching the price to possibly come back down toward this 20 area, this lower region that or more like a value area low of this balance area here. And last week we saw gold went back above the 2010 level before it pulled back, and it finished the week just slightly under 2000. So I'm still looking for gold to continue to move higher, and once it pushed above this $2010 level, I expect it eventually to come up and hit this all-time high up here at 2090. Now, let's take a look at the price action of the SP 500. As you can see, last week, the price closed way above the upper range of the expected move and got above this 43.25. Essentially, got back above this pivot low here. And for the coming week, we'll be watching to see will this gap get filled. And here's what the market is pricing in for the coming week. And here you see that it is pricing in the upper range to fill this gap, but the lower range is actually coming back down to this trend line here. See, they're sitting at 4,300 level. So the key level to watch for the coming week will be 4,400 and 4,300. If it could get above the 4,400 and up above this upper range, then be watching for the S&P 500 to work its way back up to this 4,500 area. But if it breaks and come down, dip below the 4,300, then I'll be keeping an eye for this thing to come back down, fill the Thursday gap, and work back down toward this 4,200 area. And for the NASDAQ 100, we noticed that it came up to this channel trend line here, this upper trend line. So this could be a possible resistance. See what it be able to break out of that and come up and get above this 15,265. And if it's unable to get above this 15,265, even though it broke this trend line, it could be a fake out, and then watch for it to come back down and fill this gap. And I'd be looking for this thing to come back down toward this lower trend line here and dip below the 14,000 level. Looking at the Russell 2000, we see the Russell 2000 came down to the bottom of this balance area and had a nice strong bounce. Unless it could get above this midpoint, then I'd be watching for the possibility of the Russell 2000 once again try to break this balance area and come down for this major move and eventually get below this 1300 area. So watch the 1640 level, 1640, 1650 level. If it breaks below that level, then I'd be keeping an eye on these major move down here and eventually back down to the 1300 level. Now, if it could continue to push up and get above this 1825, then there's good possibility that it could work itself back up to this 2020 level here, or at least get up to this 2000 area, up at this upper range, of the balance area. And for the Dow Jones Transportation, we saw a nice bounce off of this 13,460 area and try to work itself back up to this 15,000 level. So we still could be just back testing this trend line here. And I'm still looking for the transportation to continue to, move lower after this low bounce here. So I'm still looking at the possibility of getting below this 12,000 level. Looking at the Dow Jones Industrial, we see the Dow Jones Industrial had a nice bounce off of this 32,600 area. So if it could get above this 34,300, then we're basically looking for this 35,600, 35,700 area. If we could put in a higher high, then we could be looking at the possibility of attacking this all-time high. But until then, this little bounce, I'd be suspicious about the strength or the longevity of this bounce. I still expect it to come back down, break this trend line, and work toward this 30,000 and possibly get down to this area here under the the 30,000 level down here at this 28,700 area. And we saw the New York Stock Exchange Composite also had a nice bounce off of this 14,500 area. And right now sitting about 15,500. So again, similar to the Dow Jones Industrial, unless it could break above this 15,700 and move up and take out this high here, put in a higher high, I will be suspicious of this move. And I'm still looking for the composite to eventually come back down and possibly test this 13,000 area. In summary, market participants got back into complacent mode quite quickly. Although we did see some buying pressure and broad market participation in Thursday and Friday rally in the New York Stock Exchange and in the NASDAQ. But the real question we should ask is, was the October low a bottom? And from the lack of capitulation from the new high, new low, the October low could be a pullback low, but not necessarily the corrective low. Surely we could see a positive November, but that doesn't imply a new all-time high will follow. The key level to watch on the S&P 500 is 4,400 and 4,300. If it goes above 4,400, then we could see more upside, possibly above the 4,550 and 4,600 area. But if it moved below 4,300, then I will be looking for the March low near the 3,800 to be in play. But in the meantime, watch for signs of capitulation. If you'd like to see what I'm watching on the SPY and the E-mini S&P 500 on a daily basis, go check out my newsletter, The Pulse of the Market, on Substack.com. You will find the link in the description below. Be sure to click the like to help promote this video on YouTube, and click the subscribe to subscribe to this channel. Good luck, and thank you for watching.